The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. My pleasure to be here Monday through Friday, market days, 11 o'clock till noon Eastern Time at 877-927-6648. And I follow 3 great hours, John and Steve. And then, of course, straight off me comes Larry. We've got programming right through the day today. And, of course, right at the end, we've got Andy Heck comes in with the commodities hour. So we really have a terrific program covering just a huge resource of information. Dow's up 40 at 18,137. S&P's up 273 at 2101. Comp index is up 15 at 4981. VEX is down 14 at 14.09. You've got the E-minis I've got right in front of me, the daily on the left at up 225. You've got leg B, peak B probably being made right now in the 120-minute chart. Nicely, whoops, it was nicely above the 9-period moving average of 2099, 2098 actually. We'll see if that's going to hold. Just so interesting right now, and I'll explain why at this very moment, because we're looking for, where did it go? Oh, wrong place. Right there. 1, 2, 3. The QQQs need to get D. They don't have to, but really, in the Chapman Wave methodology, we wait patiently for Ds to occur. And there's a good reason to think that it could still happen by, I would actually love to see it happen Monday. And I'll explain why. Look, I move this away. You can move up in the Qs. Oh, it actually could happen anytime. But if it happens Monday, actually, interesting. If it happens before then, you've got 2 doji-type candles that we're looking at. But most importantly, we really want the SPX to go higher. And it's going to be quite a distance now from 2100 all the way to 2119. You got 19 points to go. It's about 200 Dow points. Wow, what could make 200 Dow points to the upside? One of the reasons being, now, you don't have to get this today, and you don't have to get it tomorrow. You don't even have to get it next week. You could get it in 1 week's time, 2 weeks' time, 3 weeks' time, 4 weeks' time, 5 weeks' time. But there should be a leg D above 2119.59. I'm anticipating that somehow or other there's going to be a move to the upside that takes out that high in the weekly chart of the S&P to go where? To go to 2119.60 or higher. And that's going to start leg D. At that point, we should have all the little ducks in order, and we can start thinking about whether or not to go short the different indices. I suppose in a way you could have started here because you've got your peak D in the Dow, you've got your SPX.X, you've got the peak E in the Dow, peak D in the S&P. The QQQ is missing, but not the comp index. The comp index is already made. It's peak D right there. The IWM trading at 122.67, up 31 cents. There's got a G/C. Certainly it could pull back from a G because that's exactly what fits with the MACD turnaround. You've got your D, a leg D in the weekly sound. And most importantly, if you had to look at this, if I included the NYA.X, you've got 11,018, up 14. It's made a peak E with a doji top, and the MACD and stochastic are turning down. Price has held pretty well, but I'm watching this real closely. Why? Because if there's a stalling motion without taking out the low of yesterday of 10,941, but instead we sort of gradually climb to the upside, that's going to give some kind of impetus to the other indexes to move a little bit higher. IYC is another one. Very important. It made a peak E top, leg D in the monthly, leg C in the weekly chart. That would take an entire 2 weeks before it can make a leg D. the way this is unfolding, bottoms are often made together when you get a climactic low. Tops can rotate. Remember in March of 2000 you got the stocks and the semiconductor index and the S&P and the NASDAQ all making highs. No. Just the S&P and the NASDAQ making all-time highs and a top, major top. January of that year, 3 months earlier, you got the Dow making its top. So you can get tops cycling at different times. Now it's really important. Oops, let me just get rid of this. Excuse me. Okay, now what's really important about this particular configuration is that when I'm looking at the VIX index, the VIX is holding off the most recent low of 1287. It's trading right now at 1428. It had actually hit yesterday almost the 200-period moving average of 1533. What's really important about it is that within the context of the volatility index starting to give signals, we are now in the basing process between 1330 and I will put it just a tad lower, maybe 1260, somewhere 1250, somewhere in this area. I suspect we're going to be looking at some kind of turnaround to the upside in the VIX index. And we should see, within the context of the 200-period moving average daily at 15.44, some attempt not only to get to that, but to overtake it. Now, it's really important. And I'm hoping, I don't know if it'll work out. I believe it should, that by tomorrow at 4 o'clock, I'll have enough information to start tomorrow afternoon, Friday evening, and early Saturday morning to start giving my subscribers what I'd promised I'd be looking at as we're getting close to that leg D in the S&P, the scenario of what kind of balance I'd be looking for in your portfolios, what I'm looking for in terms of some kind of a topping action, what potential move to the downside I'm anticipating when and if I get some kind of a sell signal coming up very soon in the indices. And if that is correct, is that the double-digit pullback? Is it going to be more serious than just an 8% to 10%, 11%? Could it be 20%, 22%, like back in April of, was it 2011? I'll be able to at least get a sense of what that's like. And then, as I had said, I believe 2015 we should start another big leg to the upside. I'm anticipating that we're in that 1927-28 period, and I have no choice but to constantly refer to that period because of the extraordinary amount of activity that's moving to this mega cycle. It's really a gigacycle, as Pat in Dennis Cape Cod had mentioned. It's a gigacycle. And in this gigacycle, you're looking at people with, they're lining up to buy cars that are over $500,000. In fact, there's a car for sale for over $1 million, and the waiting list is takes it into, you can't get it for at least 2 years. This is going on and on and on, as well as buildings and houses for sale and being built that are extraordinary. I do believe that we're coming in for some kind of correction, and that corrective pattern could be quite important to be able to monitor. So I'm hoping that I can do that. I'll repeat that again. I think there's a little sound issue coming up and down the wires at this particular point. I'll repeat that just before we go to the end of the program. So now I'm looking at that VIX index, and now I'm done with the VIX index. Now let's go on to gold. Gold, in March, I had said there's a chance that gold could start having a nice move that replicates the arch formation that we've seen before, and that could take it a bounce up to the 1320s, maybe even the 1340s. I'm not sure yet, but if that's the case, what I'd be looking for is some kind of reversal in the dollar, and the dollar's only in leg B. So I would say it's only next week that I could see the dollar start to pull back. If I'm correct about this, let me show you the dollar. Look, you've got the cup formation. When you spiral out of a cup formation, what I call the Chapman wave cup and ladle formation, it usually takes you to at least a leg D. Then it gets a peak D. Could go a little higher, but what's really important about this particular pattern is that when it finally gives you a peak of significance to reverse back down, it goes back underneath the lip on the left side, which would be 95.48 in the indice, and that's how I'm looking at gold. I think that when the dollar finally pulls back, you should see gold move to the upside. Now, I'm looking at this in terms of the EUR, USD, Euro. The euro's broken its left side low bar of 1.10973, and because of that, it says that this, well, it was yesterday, huh? Let me just see. No, yep, it was yesterday. So it's usually the bar of, or the very next bar that has to see a reversal that takes you back above that, because if it doesn't do that, you could go even lower before there's a pretty good bounce to the upside. So that's the euro. And now look at the USD JPY. USD JPY is the US dollar pair, currency pair. Now, this is going to be very interesting. I've got in the daily an inside buy signal that went to a buy mode and has gone in a very short space of time, but more importantly, in a very short series of higher highs and peaks to a leg D. Normally, what I would say is that leg D invariably is confirmed as it spirals above the left side previous C minus, the one that didn't really fail, but it stalled, and that was at 120.475 in the dollar Japanese yen currency pair made on the 11th of February. Now what's going on is that we haven't yet gone above that, and it's already a D. So I'm going to be watching this real closely, because I would have said that there's a real good chance based on the weekly chart that a break above the high of 120.475 would quickly take you to 120.817, the high of the week of December the 26th. I remember that was the shorter term top in the market, and then maybe even challenge the high of 121.838 made a year earlier. In the same year, the same month, December the 12th. Of 2014. So we'll see. We're watching this closely. I think we need to go to the bonds. Bonds have slipped. They went underneath the 152.92 low. They went to 125.90. So that's going to be really important. And crude oil seems to be trying to make a stand here to at least make another arch formation. Hey, I'll be back. Basil Chapman, 877-927-6648. Love to hear from you. And the Dow's up 29, S&P's up 1.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. The first question I had was email from Don was, hi, Basil. Last week you looked at MET, M-E-T, that is MetLife, Inc., in the final moments of your show, but I did not get your insight on MET. Ran out of time. Thanks, Don. Okay, so Don, this is what I was looking. What I said is it was acting very well. I like the fact that it made that little conglomeration of that sideways move. I called it a cluster pattern, and that it looked very much like it should go to a D, which it's gone to. And I also said that if it can hold in this area, then the 200-period exponential moving average of 52, I think at the time it was just under 52, would be the magnet. I couldn't tell anything from the weekly, but that the monthly was starting to improve after a very ugly candle, and that because of that ugly candle, it needed to, I don't know if I got to this, but my eye said it should break above the 52.30 area to say that it's turning the 9-period moving average, instead of being resistance, back to the support it used to be. And in the den, Fletch says Met will do well as interest rates rise. Yeah. Now, that's a good point. And what's really important about this is that you can see the importance of the 200-period exponential moving average, that orange line. Let me see in the charts if you can see it on Tiger TV. Oh, beautifully. You can see it beautifully. Look, like a sine. I always talk about this. A sine wave forms as the price finally, after all this time, it goes, look, it hasn't been above the 200-period moving average since back in December. Then finally breaks down, and now it's taken all this time to go A, B, C, D, A, B, C, D, E, pulls back at on the 17th in just late afternoon. Then it starts a sine wave movement, up and down and up and down and up and down. But look how many times it's turning that into a springboard, like a little trampoline. So I like that action, but it's a 120-minute chart. It really is only going to tell you the shorter term. Important, but shorter term nevertheless. So let me just quickly say that here's my impression of the monthly chart. You see this beautiful up move that when peak A pulls back, starts a little minor A there, then it goes B, C, D, E, and then peak F. Peak F is where you've got to be really careful if you've got a divergence between the stochastic and the MACD. Got it? And then you went all the way from a high of 57 back in July of last year to the low, most recent low in January, of 46.10. So that is, so that's 46, that's 11 points. That's almost a 19% pullback. Now you've got yourself not yet a 50% pullback. I think that's what I'd mentioned the other day, is trying for a 50% retracement. But what's most important about this is that within the context of what we're looking at here, which stocks, I have a question I'm going to get to in a moment, which stocks could look good after a pretty serious pullback. Of course, we'll only know that when we see the pullback and you start to see which stocks are starting to form really good support at much higher levels than others which are breaking down. But MetLife right now looks like it's good. I like it if you're long. I would just say that it's really struggling in the daily to get above that 200 period moving average support. Once it does that, 53.08 is an upside strong resistance area. That's what most fund managers will be looking at, because it's the 200 period SMA, the smooth moving average. I look at the exponential moving average, which most people don't look at. So that would say to me that would be a strong resistance area, and then it could bounce around, could consolidate, in fact, for a period of time between 53 and 49, 48. And if that really is the lowest that it goes in the next 6 weeks, that's very strong action. If MetLife breaks under 48.30, 48 support, it'll probably retest the 46 low, 46.10 low of late January. Now, what's really important about this is it's walking the 9-period moving average. The MACD is good, stochastics at 89%. I'm thinking that next week is going to be the critical week. It needs to get, I would say by Monday afternoon, you want to see it testing the 52.20 to 52.40 area. That's going to be very important. I hope that helps you. Looking out, that's really the question. Looking out, again, I want to go back to the weekly chart. The weekly chart is so choppy with lower highs and lower lows that all I can say is it's the daily that right now is the rudder. It's formed a potential consolidation phase. I could even call it a stalk leg formation. It's going to be really important if next week it's able to climb into the 52s and hold there by Friday a week. That to me would be very important. That would be leg B continuing in the weekly chart. And most of the time it's only gone to an A, maybe a B and then failed. So we're going to be looking at this closely. So that's MetLife. The other one was AWK. I'll come back to AWK. Why? Because American Water Works Company, Inc. has been spectacular, walking in the 9-period moving average in the monthly chart. Now it's consolidating in the weekly, and the daily's a little bit weak. We'll look at that when we get back. Dow's up 28, S&P's 1.5 points up.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So request for AWK, which is American Waterworks Company, Inc., trading at 53.80, up 37 cents. So look out, walk the 9-period exponential moving average. Just a beautiful stock from the low of March of 2009 at 16.22. 16.22. And what's really important about that is 16.22. The moment it took that little period to break above the 200-period exponential moving average, really confirming it a year later in August of 2010. From that moment on, it might have pierced the 9-period moving average a couple of times, once at a peak, after a peak seen a year later in August of 2011. Then again in July, look at the rhythm of that, of 2013. So this says to me that that 9-period moving average is not only very important, but you've got a divergence between the slow stochastic pulling back and the MACD just flattening out now. And it's made a peak D in the monthly chart, confirmed last month, and that high was 57.48. And at 57.48, there it is. What's really important about this is that you've only dropped to the 52s. So it's a 10% correction, and a lot is going to happen at the end of this month where it is and how it survives. The reason why it was always on my list, but I kind of forgot about it until I think it was Bill, Bill reminded me about it, is that my thinking from quite a way back had been that at some point in the United States, we will have an internecine. It would be some kind of a water war between the states. Now, that's not a pleasant thing, especially when it's amongst family within the United States. But it looks to me like that is something that's still on the agenda, and I'm going to put it there as something I'm looking out for. I'm not sure exactly. I want to do a little research over the next couple of weeks to see which water companies, if they're even going to be involved, what could happen and how it would relate to them. But that's just something in the back of my mind. It's just sitting there in my huge market trend watch section. But in the meantime, the weekly chart is saying this H pattern that's formed says, don't close underneath 52, because if you close there, the next candle of importance has a low of 51.15, and then it's pretty much a black hole until it goes to that 50 to 48 area. So at this particular point, it's in a trading range, trying to form an H that maybe could go to an M pattern, could be another bounce. I don't think right now it's ready to go into the 56s. I think it's just stuck, and if anything, it's going to make lower lows and lower highs. How it holds in March and April is going to be very important to be able to put back on the list and say, hey, this thing's going even high. It's going to have a brand new recycle to the upside. Hope that helps you. Let's go to Apple, because that was the next question. There we go. I had spoken about this the other day. I said there was a round number, 133 round number, close and high to Apple. Very unusual action. Well, the very next day, Apple broke that and went to 133.60. I happen to call this, it goes in, I once gave a webinar called the silent doji and the silent candle. This goes into the category of a sign. If you had to do a scan, you would not find the silent dojis because they miss the exact top and they have a particular characteristic. And in this case, this fits that exact example. And it says that you might have gone to 133.60, but that 133 double round number, high and close, was very important. It says that Apple needs to close decisively above 133 to recycle higher. And number two, it says 131, usually just a tad below the round number, is the key moment, because very often they will rally, stocks will rally back, but not break the round number high, if that round number is a round number of significance. So as I see it, Apple is in leg B to the downside. It's in leg D, probably there's no way that, no, I shouldn't say no way. I see very little chance of it going to 133.61 to recycle peak D, leg D. I think it's a peak D forming in the weekly chart, and it's a leg E in the monthly. That is why I mentioned to my subscribers this morning, I have this huge list. I don't know how many stocks with the indexes and stocks, of stocks that are making peak. Look at this. GE has just made a peak F. Can it go higher? Can it recycle? Certainly. But that peak F is something I have to monitor closely at 26.27. There are just numerous stocks that have made DEs and F and had very sharp pullbacks over the last week. Very important in my work. So here we are. This is what I'm looking at. I said I would go to Apple and just do a little bit more. I want you to talk about 121.95 is the 9-period exponential moving average on Apple. 112.76 is the monthly 9-period exponential moving average on Apple. But the stochastic's at 90% in the monthly and 91% in the weekly. So it's the rudder of the daily chart, which was led by the 120-minute chart, which had a Chapman wave 2-bar reversal from the 133.60 high, and is making an arch formation here, and it seems to want to take out the 126.61. And as Bill says, Apple breakdown new 3-day low, leg D, 120-minute chart. I actually have it as a leg E in the 120-minute chart. Whoa, wait a minute. What was that? 122.14, 122.13. Oh, A, B, and let me redo this. I have to have these things correct if I'm going to use them as examples. 92, so that's C to D right there. So it's actually not. This is D going to E, and that happens to be an F. So it was a peak F top. Oh, that's even more important in the 120-minute chart. And now it's pulling back, and the stochastic's very weak, the MACD's weak, and that is impacting because of the weighting of Apple in the NDX. It is, and the comp index, it's a very big factor, but a psychological factor as well. And that's one of the reasons why you're having trouble with the Qs struggling to get to that D. But they're only from the high today of 108.96, 108.96 to go to 109.42, no, 43 for leg D is just a half a point or something like that, right? It's nothing. We should be able to do it without Apple. So yeah, we go. So that's Apple, and it as I say, it with a round number high, it would recycle higher, and the QQQs, if the MACD is a little steep, but if the MACD is able to give you an M pattern, M for the lowercase m, the letter M, that says there's a good chance that it will go to 109.43 or higher, and that's where we got to start looking at it and saying, okay, are you ready to start pulling back sharply from here? So until we get all these little factors in order, that's what I'm looking at. Now, there's something else that I think is significant when we are looking at what would create a market top of significance, and what would create a market top that just says, hey, ho-hum, just another 5 or 6%, and then we're moving higher. What would be the difference? Well, it's the weekly charts. And if you look at something like a price line, a key stock in the NASDAQ, you'll see that there's a monthly chart of a channel that says if it breaks above that channel, don't ignore it, because it's going to be the Chapman wave falling axe formation, an expanding wedge, and it could go even higher. That would make the recent high of 1,003, what was it, 378.96, 1,3998.76. That would make it a target, with the first target being on the upside of 1,329.90, the high of the week of August of last year. And then you can go to the next level. It looks to me like that's strong resistance. And you've got that single leg A up in the weekly chart. We're going to be monitoring that really closely. You know, talking about peak D, and then says go on 4 trips around the world. I have to tell you something. Prices are unbelievable. I get this. I don't know why it's being sent to me, but I get this cruise ship stuff. I've never been on a cruise ship. I don't really have an intention of going on a cruise ship. And the prices, $78,000 for a cruise around. I think it was from Rio to Barcelona. That, of course, is top tier, et cetera, et cetera. But these are really, I mean, these are really high prices. Per person, 78 grand for the suite, et cetera, et cetera. There are really big prices coming up for many, many things. Oh, taxes. I want to talk about that. Yesterday, there was an article in the Globe. This hairdresser in downtown, in the Back Bay area of Boston on Newbury Street, had her taxes go up threefold from, I think it was from 6 to 18 or 4 to 12, I don't know what it was, but up threefold in a year, from 2014, yeah, in a year. I mean, that is That's going to be a killer. And what that's going to do, it's going to do the same as what happened in Harvard Square with the rents, so that all those groovy little mom and pop stores gone. I mean, when we think of the 1970s of Harvard Square, and you think of them now, you could go to Harvard Square. It looks like you could go to a city anywhere in the world. Anywhere in the world. Could be Sydney, Australia. It could be Barcelona. It could be anywhere. And it doesn't look all that different. And that's what's going to happen to Newbury Street. They're going to just get those big stores in, little mom and pop stuff gone. It's a great shame. It'll come back at some point, but not for a very long time. Now, let's get back to the market. And so Priceline, Amazon had a really nice rebound. It went up to peak F. It's kind of stuck there. It could recycle if there's another new high. I'm inclined to think of it as a new high would not be G, but it could recycle to a new leg C. But there's that single leg A up. We've had that in a number of stocks, just a spectacular move. But these are nothing unless they take out the old high. And then you might even have a recycle. So it's great that they've had this kind of move. But it also says, be careful, double tops are possible. So we're looking at Amazon, Google, GOG. I always look at Google. The trading stock, I think, is Google B or something like that. I've got Google, GOG. And Google right now is at 576, up 290. There's that single leg. Well, it's really a leg B. Huge move up, and it's going to the resistance line in the monthly. Oh, I tell you, the next week is going to be so important. I'm considering that next week probably it might recycle into another week, but this phase right now that we're in is, for me, one of the key moments that we've had since April, May of 2011, and the October low. But in this case, I'm looking more at the potential for a toppy phase. We don't have to get it. We might recycle. And in fact, today we did try to go long. We did actually go long a couple of stocks, but we're treating them more as sector or a particular stock that has a particular cachet, or in this case, a sector that has a rebound potential. I'm not getting carried away here on the long side. Haven't yet started to get carried away on the short side either. Missed a couple on the short side, but we will get those. Now, also, I said I had a question about would I look at IBB? Absolutely, IBB, which is what? Yesterday, I mentioned that we missed by a few cents going long the 200% long IBB ETF. What a pity, because it spiraled in that leg D. It's in the leg D right now, gapped up as leg D in the weekly that's broken the resistance. And until I really get signals that tell me that it is time to be looking at the short side, I have to just stick with the long side at this particular moment. There are many signs to say get ready for a reversal, but I haven't got the signal yet to get ready for the reversal. Look at the IBB, iShares, Nasdaq, Biotech. MACD in the daily is 90%. The MACD is strong. The stochastic's at 90%. On balance, volume is still rallying. Could go even a little higher. The weekly chart, 91% in the stochastic, MACD good. Monthly chart, 94% in the stochastic, MACD good. So you don't want to get in front of the freight train. Why? Because the light might not be the light at the end of the tunnel. It could be the headlamp of the engine coming towards you. You just got to be really careful. And in this particular instance, if I'm looking at my Dow Quartet, as we go out, look, Dow Quartet, GE made a peak F top. IBM had a rally and now it's kind of fading. Triple M, I'll be back with these stocks in a moment. Triple M peak D and UTX already made a peak E. I'll be back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
Question about UNH, ABC, made a big C. It looks like it wants to go to D, United Health Group, Inc., Managed Healthcare, leg D in the weekly chart, and leg F in the monthly. And this is actually, I'm pretty sure it is part of the Health XLV, and that XLV has just jumped. Maybe it's an F on the daily S&P Select Healthcare Spider Fund, E in the monthly, and G/B in the weekly, and no sign yet in the weekly or monthly of a turnaround, but the daily says be careful, you're getting a little bit toppy right here. So now I wanted to do a couple of things. Number one is just want to review in the context of the webinar that I did, the match between late 1920s and now, I said that I would, over a period of the weeks, I would be looking at how the template that I had shown is working out. So far, it seems to be working just about the way we thought on the shorter term. The other is that I will try my very best over the weekend to get out as much as I can in a report for those of you who are looking for what to do with your money in terms of percentages, maybe on the long side, how to play maybe the short side, if I'm correct in looking at some kind of a reversal in March going into April, what you would do and how to plan your portfolio so that you're looking out towards the end of the year, towards the summer, late summer, going into the August, September, October period, which is going to be a really interesting period. If we continue accelerating like this in the giga moves that we're seeing in the prices of houses, prices of the skyscraper theory, the automobiles that are just now they're over $1 million. They standard now going at 230 miles an hour. You can get them off the showroom floor. Just a whole bunch of things. I'll try to sum it up and give you some coherent analysis, at least try my best. And I'll talk a little bit about bonds and what I'm looking at as well. Meantime, back at the ranch, let me just do a couple of things here, make it as easy as I can. I am expecting somehow, one way or the other, I don't know how it's going to happen because Apple's failing, but I think the Qs will make that D, number one. Number two is I do believe by next week, sometime next week, we should get leg D in the weekly chart, if it doesn't happen this week, above 2,119.59 right there, because that would start leg D, and then we'll have all our little ducks in order. Even the IBB managed to make that leg D in the daily, so I don't see why the Qs shouldn't do that. Once we get it, we'll start to look at, is this a time to be shorting? Is this the time to be looking at the XIV, which is it trades. It's a VS inverse VIX short-term ETN. In other words, as the VIX comes down, this goes higher, trying to get to the 34.01 level of the 200-period exponential moving average. It's at 33.49. It's in F/B. So at this particular point, what I'm really looking at is what signs would give me an indication that we are making some kind of a significant, when I say significant, I mean more than a 5 to 6% pullback potential coming up in March, a reversal that goes into April. Talking time and price. That's really what I want to do. I don't know if I'll be correct, of course. I just do the very best I can. That's number one. Number two, what sectors are possibly looking good for the pullback to hold and then come back strongly if there's another big rally to the upside? And the other, and this I think is absolutely key, what sectors are becoming, they are still very strong on a short-term basis, but they are going to be the most vulnerable when the turn comes. To me, this is all very important. So that's for subscribers. I'll try to get the posts out as I usually do over the weekend. This time I'll try to get it out Saturday. Certainly by Sunday evening, you'll have a bunch of information. Thanks for being here. Stay tuned for Larry Pesavento. I'll be back with Tom O'Brien later on this afternoon, and have a great day. Otherwise, I'll see you same time tomorrow. Thanks for being here.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.